Let's do our chart of the day, Crowdstrike. We talked about it on the way up. We're going to talk about it on the way down. Falls on disappointing earnings, their forecast. What do you think, Joe? There are some who look at the slide today and say, like Mizuho does, fantastic setup. That's what this pullback does. The stock's had an incredible rebound from the issues of, what, 6 months ago? What do you think? You own the stock.
So I wouldn't use the word fantastic, but I would say you have to give them the benefit of the doubt. You have to trust that the subscription revenue growth in the second half of the year is going to be there. Keep in mind that one-time discounts are now ending. They're rolling off. And I think that's one of the reasons why you've seen in the third quarterly report since the misstep of last summer that the guidance here was not so strong. So it's still above, technically, you're still above the 200-day moving average. I think it's at 333, not breaking down. But fundamentally, they get the benefit of the doubt, in my opinion. And I do think in the back half of the year, that's why you're buying it today, because that subscription revenue growth will be there. Palantir got up today, by the way. William Blair had it as underperformed. I don't know how long they had it there. Presumably that didn't work well. They upgraded it to market perform, though. Joe, what's your take here on this stock, which has been really at the forefront of the momentum unwind? Yeah, and you had this 9-day period from February 18th to February 28th where it fell from 125 down to an intraday low of 78.58. What's the bounce look like? Not really a V, more of a U. I said a couple of weeks ago, I want to buy this stock if you don't own it around 84, 85. Well, guess what? It's right there. It's kind of sitting there. The market generally, after you have that type of free fall, it doesn't give you the opportunity to buy it over a prolonged period at an expressed price. If you say I want to buy it at 85, usually it goes down to 85. It's there for a moment. You look in the afternoon, you say, oh, it traded 85 and I missed it. Next thing you know, you're paying 89.90.
Well, right now you're paying 86. So if you missed at 85, it was $1 make a huge difference. And let me ask you this. I still don't think it's a strong enough for bounce. So you own it in the ETF? Yes. And the momentum is still, believe it or not, the momentum, if you're measuring momentum on a 12-month basis, it's still positive. Okay, so why don't you buy it personally then? Because I own it in the ETF. I own a lot of momentum names that have lost leadership, and I am not ready to basically double down on a factor of momentum, which is clearly in a correction process.
Can I ask you two questions?
Please, you can.
So we all know that, and we've seen it countless times, that in a slowing economy, enterprise spending, which is CrowdStrike, is the first to be put on pause. Deals get pushed out. That's one thing. And the direction of what we're seeing in economic data, including jobs today, would say that the economy's slowing. Second thing is, if you want to cut costs in the government, why wouldn't you say, we know that that DOGE is not sensitive to the security of data by sending, people without clearance into Treasury and all that thing. So why wouldn't you say, why are we double paying for cyber? Why can't just Microsoft, some very good cyber protection, do enough for us? So with with CrowdStrike's exposure to the government, the other's exposure to the government, why isn't that an added risk? Both of which should really hit the multiple, and maybe down 8% today isn't enough for going forward. Yeah, I think again we look at markets strategically different. Right. That's something that is taking a fair-minded theoretical look at the optionality of what's ahead in the future. Right. And it's a reasonable expectation that you present. I'm not dismissing it, but it's not ultimately what I do. Got it. It's not how I'm looking at things and saying theoretically in the future this may unfold. Yeah, it's obvious to me. If that happens, Steve, you're 100% right. That's damaging towards revenue and EPS growth, but I just can't sit there and speculate this might happen or might not happen. ANET upgraded today to a buy. The target 115 at UBS. You own that stock. What do you think about that one? Well, you do as well. This should be working a little bit better than it has recently. It's been a little bit on the decline. You would think that the networking here related to AI and the data center connectivity would have a little bit of more of a positive benefit. I do agree this is the right spot technically if you want to make the play on it. And if there's going to be an overall recovery in technology, this will be one of the clear leaders because it is identified as an AI leader. AppLovin's down another 4% today. What about that one? So AppLovin, I think you asked me on Monday if I thought it was up at around 350, 355, if you thought that was it, if the bottom was in. And again, no, it's just a classic example of it looks like a U. It doesn't look like a V. And you need a V
You need that V type of bounce to really gain confidence that you've ultimately reached a bottom. You know what's interesting is, yeah, everyone's kind of looking at where we are technically and saying we're riding slightly above the 200-day moving average. We're trying to find support. We're hoping that we come out and that there's going to be a relaxation in the tariffs. Really, the other side of that is if you want to get to a tradable bottom, it's probably let's get the bad news out of the way. Let's flush below the 200-day moving average. Let's basically get all those non-discretionary funds stopped out, and then ultimately you'll find your bottom and get the V-shaped recovery. But at AppLovin, you don't have that.
Okay.